Welcome back to the Daily Hunt. I'm Henry, and I am a swing trader, investor, and investment manager. What we do here on the Daily Hunt is we cover the broader analysis of the markets. I spend about 10, 20, 30 minutes covering the key themes that I see in the markets for you guys to get a better idea of what I am looking at and what I think you should be looking at as well. These are just insights and analysis. Occasionally, there'll be some trading ideas like gold a few days ago where I said that I was going to short it and it moved from 4.3K to 4K. And there will also be some other insights and analysis related to trading and investing overall. If you're wondering why you should be listening to me, I am in the US Investing Championship. I am currently sitting on around 85% profit for the year. So I know a thing or two about the markets. I'm outperforming the markets, and I consistently outperform both crypto, so Bitcoin buy and hold, and the S&P 500. Now, with all of this said, I want to cover what I think today is very, very important. We had a sell-off yesterday, and we are continuing to have a very volatile October. And I think it's very important that we look at the S&P 500 and NASDAQ and how they link up with the US dollar. Now, there's some rumors about Trump or the US government going into quantum stocks and investing in quantum stocks. So we're going to be looking at that as a theme. And there's also news that Trump might be speaking at 3 p.m. I think it's local time over in the US, where he's based. I think it's in Washington. And that could also trigger the markets. Now, it could be negative, it could be positive. We have to wait and see. So it's going to be more volatility, in my opinion, in the next few days, with CPI data also coming out on Friday. So I think that's tomorrow, if I'm not mistaken, because I think I've forgotten what day it is today. Now, let's get right into the analysis. I don't want to waste too much time here discussing the broader market and what I think is happening. I still think November will be a good month. And I'm still working on the thesis that November will be the month that we need to start scaling back into the markets. But let's go into the charts and see all of this live right now. Right, so this is the S&P 500 chart. And the last few days I've mentioned to you that for me, the scenario, one of the scenarios that I think would be quite healthy for the markets would be a drop of around 5 to 6%. So that would take us all the way down to 6.4K, and that could be a nice rebuilding zone for the S&P 500 and the broader market. And it kind of makes sense because we've had this very, very nice run up from April, the bounce on in April, all the way up to early October. Now, that's not to say that we can't move higher from here, but I think, as you guys can see on this chart, there is a bit of resistance on this lower trend line or part of the band. There's this lower level here which is resisting. I've mentioned it before. I think it could be similar to this move that happened around April of 2024, where we end up going from a channel being based here to then being based on the lower end. And then there was a channel again being built. Okay, so that we could have now a channel being built like this. Okay, that's something to monitor. We are also at all-time highs. We've also hit one of my overextension zones that I identified late last year, early this year, as a key level that I see the markets going into the new year, meaning 2025, which I think the year now is about to end. And the second overextension zone, mid-2026, for me, was 7.2K. So, are we going to get a dip and then build up to that level? Or are we going to keep on grinding up to that level? We have earnings. We've had fairly bad earnings with some companies like Netflix and Tesla. So we have to be a bit cautious. But overall, I think analysts are seeing this as a good earnings season. and they're expecting good earnings. Whether they meet expectations of investors and forecasters, we have to see. At the moment, we're seeing some sell-offs. I think we saw a sell-off in Tesla as well, if I'm not mistaken. I checked it briefly last night here in the UK, and there was some selling off. Let's have a look. Right, yeah, we had that sell-off. So I end up selling Tesla around this 440 level. Yeah, 440 level for a tiny profit, almost break even here, just to protect myself. We ended up selling a big chunk of our portfolio just because they were continuing to drop, especially this ARAI. We even sold like AMD, Intel, etc. I just don't want to hold anything when there's volatility. I'm happy to rebuy and re-enter when the time is right. There were some that I held. I think I ended up selling NVIDIA as well. Yeah, I ended up selling NVIDIA as well, I remember. And we're currently waiting here for the market to finish this volatile month. October, it tends to be a volatile month. I have to say that. And one of the things that I want to point out here is I shared some macro analysis in my Discord group. It's probably worth sharing here as well. I just want to show some stats. When September is a positive month, we tend to see bad returns in October, or we see very low returns. Predominantly, we see selling off. Okay, 40% chance of a positive October. However, we tend to see 100% of the times when September is positive, a good quarter, fourth quarter. Okay, so what it means is my thesis that I've been mentioning for a number of weeks now, maybe even months, that we have a red October because of the volatility, and we have a green November leading into a good December still stands, and I think the probabilities are in our favor for that to happen. Okay, this is very important here that we stay focused. We don't let the market and the news impact our decision making, and we continue to make good picks in the stock market, especially. Okay, that's something I wanted to point out. There's a number of other things I wanted to point out. One of the other things that I wanted to share here as well, I think it's quite interesting, is that the bellwether index is at all-time highs. So there is still some strength left in this market. It depends where it's focused and where capital is flowing and rotating into. This is a prime example of capital rotation, prime example that certain stocks, if you're a good stock picker, are going to do well. And that's exactly where we are. I mean, some of these are already traded, such as AMD. I was looking at Amazon. I think it was yesterday. We were looking at Amazon in the Discord group. Okay. That's the situation with the S&P. I want to cover the NASDAQ here as well. The NASDAQ sold off a little bit more, I think, yesterday due to sell-offs in NVIDIA and some of the tech stocks. It's quite tech-heavy, the NASDAQ. The Russell also selling off here a little bit. Again, within that kind of volatile, sideways market area of since mid-September to the current period here that we are in, which is about a month and a bit. So the market hasn't done much in a month or so. It's just been volatile. One of the things that I mentioned yesterday was the VIX crossing the 19 level, and that should be something that we should be worried about. It crossed that level, but however, it came back down, okay? So we had that spike up, the sell-off that we saw, and then it came back down and normalized. Now, this trend line for me is very important. Will we continue moving up higher and staying within this trend line to move all the way up to, let's say, 30, where there's quite a significant amount of fear? Or are we going to consolidate for a little while during October and then break below? More complacency kicks in and the market moves up higher in November, like I mentioned. For me, I think that scenario is a higher probability. This move, I think, to around 29.30 again would take us to, I think, 6.5, 6.6 with the S&P, and then we would have to rebuild a little bit slower, maybe getting a Santa Claus rally rather than an early November move. You have to bear in mind that we also have CPI data. So we have CPI data tomorrow. Inflation could also be increasing because of sanctions against Russia, with US oil rising yesterday. But I think this that will come in maybe next month rather than this month. If this is in line with expectation and forecasts, then I think we get interest rates lowered on the 29th. And this is the reason why I think we can still have some bullish momentum going into November and December, and there'll be, maybe one final run for the end of the year. Then we might dip in the early period of next year, in my opinion, to then build up another run. But because we know that February is typically a very volatile and negative month. That's what I'm looking at. It's been a hell of a ride this year, if I'm being honest. It's been up and down, all sorts of news and events. Trump unexpectedly coming out and speaking on a Sunday. All sorts of events. Geopolitical, economic, multiple factors causing volatility in the markets. But it's been a good year. When we get dips like the one that we did in March, that is a huge opportunity. And I really hope that all of you have been able to trade this opportunity here. So up until March, I was up around 7-8% for the year. When this dip comes in, we get lower prices on everything. Now I'm sitting over 85% for the year. Okay? So these significant dips that we get, even the smaller dips, these are good buying opportunities. Even if we get a nice dip here, a correction of around 5% in the markets, we will get a huge opportunity there to buy some of the best opportunities at a lower price. So I hope you guys are profiting from the market this year. And if you do want some new ideas to trade, I have a Discord group where I share my watch list every day. We show you one or two ideas for stocks and cryptos pretty much every day when there's new opportunities. And I also provide macro and market analysis there and engage with you guys in that Discord group. And it's only £15 a month. So the link is below in the description of this video. Go and join. Try it out if you want some new ideas. In terms of where I think the rest of the market is, I want to cover the US dollar firstly, because for a number of days now I've been speaking about this 99 and 100 level. I want this level to be cleared. So we want this level to be cleared. And the reason, if we're going to get a drop, this level gets cleared, essentially. We also need a bit of a drop in gold. Logically speaking, gold has to move down. However, there is a bit of euphoria there with that asset. We'll probably see a drop in the markets, in my opinion, if we break this level here, 99.2. And that will take us to a strengthened dollar, and then eventually that all that free cash, usually this will be because of profit taking or exits in the markets or move from gold to the dollar to then potentially move into riskier assets. That could also connect with that scenario that I mentioned, which is we have the dip, we have the VIX rising, and from there we then end up building a new run in the markets. That would be the ideal scenario, right? Building from where we are right now, I think there isn't going to be much appeal for a lot of investors to buy assets at these prices. If you bring it a little bit down to around that 6.5K, 6.4K S&P 500, everything kind of drops a little bit. We'll get a nice little discount. And then we get the volatility, liquidations happening, and then we move up higher. That would be a nice way to kind of lead us into November and December, but it could easily be triggered by this week's and next week's events with the Fed interest rate decision and so on. Trump also can come out and impact the markets today with his announcement around 3 p.m. His local time. Okay, so the dollar, I still see it moving a little bit higher here. I still see it holding this trend line similar to the VIX. I think it can kind of hold this trend line, and when that breaks, then we can kind of see further movement in the rest of the market, and maybe more risk on trading. What else do we need to cover? We have to cover crypto, of course. I nearly forgot crypto. Very, 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 very important for you crypto bros out there, where the situation is with crypto. So we'll start with Bitcoin, like always, and then we'll move on to the other ones. I do like what's happening with Bitcoin, right? So we have this bounce around this level, around the 107, 106 level. I mentioned yesterday that 106 is a key level that I think we need to find support. We're finding support here, and I am looking for this kind of like key pivot point here where the breakout is. So what have we done? If you've seen my charts the last few weeks, I said we're going to go up higher here, get a rejection, come back down, and then load up. I'll then load up for that real trigger point. This is what's happening so far. Hopefully, for the market, for the crypto market to survive, just because alts have been completely crushed, we do get this move up higher here. Now, whether that's going to hold above 118, if we do break up here, it's a different question. But I think if we can get the breakout, then we have hope. And then maybe momentum will build up and other factors will come in as well. Interest rates, other catalysts that we probably won't even be expecting until the time comes, or maybe closer to the time. So this is what I'm watching out for. Nice bounce on the midpoint, nice bounce here as well around the 106 level, and that kind of takes me onto the different chart here, which is the kind of the bands chart that I use, just kind of gauge where certain levels and supports might be. It's not perfect. Nothing in trading is perfect. Remember that. So it's all about probabilities and playing an advantage and an edge in the markets. Here you go. Support around this level. And will we go up to 115? We can probably take the trade around this level and then get resistance here. That would be a kind of like a break-even trade. I still see that 118 zone as a resistance zone as well. So, on this chart, we have a 115. On my analysis about 118, I think it's a key level there. So we'll have to see about that one. Same situation with Bitcoin, following exactly the playbook, following the scenarios I created. Yes, rejection, but we dipped and now we're moving up higher. Hopefully we get that momentum coming in. Okay, Ethereum now. So I think you can kind of see here that there's still this kind of rejection happening constantly around this level. Support around the lower end of the channel. and we have yet to have this move higher here to test upper band of the channel. I would probably look for a trade around 4.1k, and on a breakout there, that'll be an early buy, and then we would have to assess the situation around the 4.3, 4.4k level, with maybe an add-on there for that move all the way up to 5.7k. So if you're looking at this as a potential trade here, let's say we take this trade around here and we average, let's say 4.2, like around here maybe, because we're averaging up. We might get a 1 to 3 here around 34% trade, just because there's a bit of volatility, and I think it hasn't tightened up nicely. So we had very, very nice tight price action around these levels here, which drove the market. Whereas here we don't have that. We have the volatility up and down, creating bigger let's say levels where we can get liquidated. And I think a lot of traders are getting sliced up in this level. It's a very, very choppy market, so you're going to get sliced and you're going to get hurt unless you're trading like I am as a swing trader. You're going to get hurt around there. And yes, you can make some money buying these dips and buying the tops, but the probabilities of you having a good win rate above 50% and being able to trade these effectively is very, very low. So that's the kind of trade I'll be looking at here for Ethereum if we go higher. If we go shorter, we're looking at a trade around here to around support 3, and then maybe even lower. So it'll be, the short trade will be something like this. So I'll just move this here. And the short trade will be something like this. We're giving you approximates here, all the way up to about 3k. 1 to 2. The risk reward isn't that nice, but it's all right. And we could have obviously taken the trade a little bit earlier around this level, and that would have been ideal. I was on holiday, and unfortunately I couldn't trade it while it was like 4 a.m. in the morning, I think, at the time, where the opportunity was set up on my strategy where I was, and I was sleeping, so I didn't really take the trade there. That would have been the perfect trade, and then we kind of would have still held a big chunk of that position open I would have held it anyway, with the idea of going maybe a little bit lower and pushing here. So maybe take off, I would have taken off 50% here. Is what it is. We can still trade it around this level, or there is a better trade which comes from the top here. Okay, and that would be a 1, 2, 3, and it'd be around 20%. So if we move up higher, reject, we can take that trade as well. Depending on how everything sets up, we have to be assessing the situation. Okay, that's Ethereum. We have some alts moving and bouncing here as well. In terms of Ethereum, it's quite nice to see that it's bouncing around this level. But as you can see, there could be one final quick swoop here. Just one final quick sell, liquidate, and then build up around 3.5. That would be ideal for the longs. Would trap some bears as well. This could include me if I take a bear. You never know. But I'll be looking to kind of manage that situation, even if it's a situation where I get caught out. It'll be managed effectively as much as I can and minimizing losses. Okay. In terms of the rest of the market, I think we should be looking at commodities a little bit. So I'm going to be looking at gold. First of all, we looked at the dollar already. There's no point in me looking at the dollar. We'll be looking at gold. A couple videos ago, I mentioned, I think it was around 5 days ago now, 5-6 days, I mentioned on Friday or Thursday that we will go at the short on gold is a nice play. We traded that. We had the bounce around for the 4K level. I still see it maybe moving a little bit down here to around 3.9, 3.8. And this is just part of that bounce, that typical bounce that it should have if it moves down that low. So we just had a bounce, and then we can go here, 4.2, kind of fail around this zone, and then kind of build a new structure of consolidation similar to what happened previously. If you notice with gold, it just creates the same patterns because institutions are buying it, so they'll be buying all these dips. Maybe they're not buying it here. I don't know if they're buying or not, but that's kind of the tendency with gold. It's been bought after the dips, buys, and then creates a lower high, creates a lower low, and then starts consolidating, building up again, similar to this one as well, as you can see here, right? And then you have these kind of clean breakouts. We've had very, very clean breakouts with gold. So yeah, we could have a similar situation up here, come back down, create a lower low, consolidate, and then bull move up higher, or just come back down, reset. The RSI levels are going to be key here to monitor. This level here tends to be a nice buy-up zone from what I'm seeing. So when it hits around 40, 45, again, the reason why I use the RSI levels, algorithms are using them and buying around these levels. I'm assuming the banks aren't manually going in and buying. They're buying it at level, and institutions, they're not buying it. They're buying it automatically with algorithms set to certain zones and levels. As you can see here, kind of proven that around those levels when we go lower, we don't have to go all the way down to 30 on this one. Okay, if we go around this level, 45, 43, it's about a year now where we've seen that pattern happen. See, we've seen that pattern happen over and over and over and over again. Something clearly algorithmic buying, clearly automatic buying there around those levels. Silver. Let's look at silver here. So we have silver bouncing. We're going to get probably a rejection around here. We're going to get rejection here. I just want to put an alert. Around the 49 level, maybe even 50 level there on that one. I want to look at bonds actually and see how they're performing. Bonds are going down. Okay. Probably have to watch this one the next few weeks. I'm going to add one here. See that kind of early shift. And I think it's crucial here that we watch this just in case there's a shift in the bond market and security. So if the market is seeking security rather than risk on, I'm monitoring this. And the other thing I wanted to look at was US oil. Okay. Big play on US oil. We've been talking about this one. So even without the sanctions, the technicals were perfect. So we've been speaking about this one as a bounce zone around here. Exactly what's happened. Of course, I've drew some squiggly lines here to kind of show you guys what I think might happen. Seems to me like it might resist around this level, come back down, and kind of build up again. But it can easily break out, move up higher, depending on the way the sanctions are impacted. How much they impact the markets and investors, especially investor sentiment. Okay, so natural gas. I mentioned this as a seasonal play. I'm going to be looking at this one. For me, it's not very tradable just because it's up and down, up and down. It's kind of like a day trader's trade or scalpers. Not really my type of trade. Swing trading, I'm looking for kind of high risk reward. I'm looking for breakouts. I'm looking for momentum, trend to follow through. That's why we trade stocks. It's the perfect market for that type of trading, and that's why we trade crypto mainly. Okay, so I think I'll leave it with that. I think the markets, I've covered broader market analysis. We'll cover the Hang Seng as well, see what's happening with that. There's a little bounce here. Today, I'll be looking at this shift here because I think I might want to rebuy Alibaba and Baidu. Two stocks that I had. Let's have a look. Yeah, okay. We end up selling around these levels here. So we can kind of rebuy around where we sold. I think it's doing a consolidation at the moment, so I'm not really too eager to buy. There's no real momentum. It's just support consolidating. I'll add one here as well as an alert for Alibaba, for Baidu. Great. The CAC 40, which is the French market, moving really well here. Earlier this year, I've traded ACA, which was and BNP Paribas, and they move really well. So I'm assuming they're probably moving well now.